Good morning, everybody. Feels like the orchestra warming up, right? When that screen pops up, you're like, oh, here we go. They're getting close. Gonna do it quick. Good morning, everybody. It's a couple minutes before the hour, so I won't say anything important for a little bit as we get working in. Bobby, Jim, Safia, good morning to you all. Safia, did you get my email? I hope you did. Jonathan, good morning. Good to see you. You guys will be glad to know that I have unmuted and started streaming YouTube. I've been forgetting that. Awesome. No problem. No problem at all. Good morning, Jason. It's good to see you guys. Claire will be happy. I was thinking that this morning, Bobby. True story. I wrote YouTube huge at the top of my I keep a notepad with me just in case I need to jot down notes or something. And I've got YouTube written right at the very top of it, as big and bold as I possibly could. So um, I'm excited. It's going to be another good day today. Guys, class this week, maybe I'm mistaken, but it's been pretty outstanding this week. The participation coming from you guys has been amazing. We've spent a lot of time reading charts. We've spent an awful lot of time in the live market and really just taking a minute to discern what it's telling us, right? Because 90% of what we do is going to be chart reading. But before we get into any of that, you guys know the routine, right? I know that I've got some newer people in the room. Guys, if you're brand new, every morning, forexfactory.com, let's go make sure that there's not some news releases that could make the market bounce and jump and do all sorts of craziness. Today is Thursday, February 9th. We had unemployment claims at 8:30. They really didn't do much to move the market. And that's okay. No big deal. We're not worried about what the claims are. We're not worried about what the news is. Just know that anytime you come to this and you see a red box, really even an orange box, it has the potential to make the market move erratically. It has the potential to spike, to jump, to do all the different things that keep it from being predictable, or not predictable, but patterns being consistent. So anytime there's news, I like to go toast a bagel, fill my coffee, anything other than put myself in front of that train. And then everything that I talk about today comes from the education page. And I want you guys to know that they're truly honest, right hand in the air. There are no secrets. My goal is to give you everything that you need to be successful. And my goal is to show you what you can accomplish with this software. Because it's really, sky's the limit. Sky is absolutely the limit, but you're going to have to learn to read your charts. So I'm going to talk about something real quick, guys, and we're going to go in and we're going to see something. First 30 days and beyond. It says and beyond because, guys, this is a formula that works. Whether you're brand new or whether you've been trading for 10 years, this is a formula that gives you the highest probability trade. Focusing on 5-1 trend trades that happen after a termination condition on the 13-2. Guys, this is what we call a high probability trend trade. This is a trade when every indicator on every chart agrees for the trade. There is no wishing, no hoping, no wanting. It's simply looking at the chart and recognizing that all of the advantages are in place. Strongest triggers, nothing in the way, no trouble spots. And this high probability trend trade is comprised of 3 rules. And we're going to break down each rule during the day. We're going to see it visually. We're going to go through and we're going to talk about it. And these 3 rules are going to give you the most important skill that you can have as a day trader. And I want you to maybe change that. Change your nameplate on the door. Don't let it be day trader. Let it be chart reader. Trading the market is 90% chart reading and 10% trading. And chart reading mastery incorporates three essential elements: where the market is likely to continue, where the market is likely to go, and where the market is likely to stop. We're going to focus on building a foundation. We're going to create a very solid platform for you guys to grow from. Fundamentals, if you will. If you played sports growing up, fundamentals. Each sport has a fundamental. Your chart reading will be your fundamental. And it's going to take you to the next level. Your ability to read charts is going to open up doors for you that are going to seem just amazing compared to where you were 30 days ago, 20 days ago, 15 days ago. And it's going to open the door to what we call a medium probability trade. And these are just, guys, this is just a little recap what we're going to talk about this morning. And medium probability trades are when most of your indicators line up for a trade, but a small issue exists. Your ability to read charts, your study in that first 30 days of the high probability trade is going to get it so that you can identify this small issue almost instantly. And this is going to be the vast majority of your trades. And when you're executing these medium probability trades, you're going to manage them assertively, and your ability to read your indicators because of that foundation you created in chart reading is going to allow you to do that. You're going to identify trouble. You're going to be able to manage quickly, to take profits fast, to get to zero loss. All of this is where you're headed, and it starts with a great foundation. It sure did, Claire. We've already mentioned you today when I made that happen. So guys, I want you to promise me two things in the beginning. And this is hard for people to do sometimes. I want you to let yourself be new, okay? I want you to remind yourself that you're brand new to this, that you are acquiring a skill that has the potential to make you millions of dollars a year. But you're in your first year, you're in your first month, you're in your first week. Let yourself be new. And as you let yourself be new, I want you to allow it to be simple. And I know that sounds crazy, right? Well, there's all these indicators we're going in, there's so much information. You don't have to know everything on day one. What you need to do is create a foundation. You need to create that foundation that gives you the ability to recognize three simple things: where the market is likely to continue, where the market is likely to go, and where the market is likely to stop. We're going to focus on that a little bit this morning. We're going to take a look at it. We're going to use the live market. We're going to use a lot of pictures, but I'm going to reference this manual straight from the education page over and over. We're going to keep coming back to it. We're going to keep coming back to every answer that you need. Good morning, Luciano. Because guys, everything you need is in these three simple rules. Every trade that you can possibly take as a day trader comes from where the market is likely to go, where it's likely to stop, and where it's likely to continue. So we're going to give you that foundation today. And guys, every now and then my brain spins and I go through things, and I was looking this up this morning. I'm going to share with you guys real quick. I was thinking fundamentals, right? What do we do? Right now, you're learning the fundamentals. If you're brand new, you're learning the fundamentals. If you are 30 days in, you're learning the fundamentals. If you're refocusing on your trading, looking to be more consistent, more successful, you are reaffirming the fundamentals. And everything seems to have them. I started just Googling fundamentals. Fundamentals of baseball or basketball include footwork, dribbling, shooting, and passing. And then it says they must learn this to play the game. Fundamentals of baseball. A successful player must be able to hit, field, throw, and run. Golf swing basics. Grip, posture, stance, impact position. Hockey, skating, stick handling, passing, and shooting. Guys, we're not going to be any different here. We're going to work on our fundamentals. And our fundamentals are going to revolve around, hey, good morning, Paul. Colorado, Burr, Chile. Nice to have you here today. What part of Colorado are you in? I lived outside of Boulder when I was a much younger man. Had a good time. Guys, we talk about chart reading, focusing on three. Oh, nice. I like the springs. Likely to continue, likely to go, likely to stop. And a 30-day focus on these high probability trend trades are going to give you those fundamentals. They're going to give you those skills. Hey, good morning, Sam. Good morning, Dave. So guys, your high probability trend trade fundamentals are those 3 simple rules. So I want you to embrace 3 simple rules. What are we looking for when it comes to a high probability trend trade? Well, your large chart, your 13-2 chart, needs to have strong trigger lines. It needs to make sure that there's no termination conditions, no areas likely to stop the market. And then guys, we're going to be able to identify where the market is likely to continue by using that limit order at areas and triggers. 3 simple rules. It's going to happen on 2 charts. And I want you to see this in bright yellow. This is your formula. A trade equals momentum, a clear path, and an entry area. Guys, that is 5 words to describe a high probability trend trade. 5 words. It's simple. It's so simple. And those 5 little words, where'd my mouse go? I lost my mouse. Are going to happen on 2 charts. Well, if you count a trade, it's a little redundant, Ron. It's an identifier. 13-2. Guys, this is your largest chart. This is your slowest chart. I play golf, Ron, so I do not count everything. Otherwise, my score would be horrible. On the 13-2, you're going to use the most current bar, and you're going to be able to identify some very important concepts, guys. You're going to be able to you're going to be able to identify the overall trend of the market. If the background is green, you're in an uptrend. And if you're in an uptrend, you should only be looking for rules to be met for high probability trend trades long. Remember, we're talking fundamentals right now. If the background is red, we're in a downtrend. You should only be looking for rules to be met for high probability trend trades short. Keep yourself on the right side of the market as you learn these indicators, as you learn to read your charts. It's going to create an advantage. Also on the 13-2, you're going to be able to gauge whether or not you have strong triggers. You're also going to be able to understand whether or not you have termination conditions, areas where the market is likely to stop. All of this happens on just 1 bar on 1 chart. Simplicity. This is a broad stroke of a brush. The 13-2 will lead the way. The 13-2 will be the reason that you look for an entry on the 5-1. And the 5-1 chart is an entry chart. The 5-1 is only an entry chart. You're going to refine that broad stroke of a brush, and you're going to pinpoint that area where the market is likely to continue. And that's rule number 3, using a limit order to buy or sell a pullback at an area inside of favorable large triggers. And by doing this, it's going to allow you to reduce your risk. You're going to be able to maximize your profit potential. But it all stems back to keeping it simple, working on your fundamentals. And the first fundamental of trading is identifying strong triggers. So guys, I'm going to take off everything but trigger lines here because I want to make sure that you can look at a chart and recognize it. Let's get all the noise out of the way. In a downtrend, when my background is red, a strong trigger line means that my small triggers have broken below the large, and the large have made that turn, and they're wide and they're angled in the direction of the trend. When I talk about a strong trigger look, it begins here, and it works its way all the way until those large triggers return to the small. They come together, the small work their way inside, and when they're inside, we call it a weakening of the triggers. You'll notice that during the strength, it's nothing but down bars. As the trigger lines weaken, we get our first reversal bar. They stay weak. We get our next reversal bar, guys. You're witnessing live in the moment momentum. A strong trigger look up. Small's above the large are wide. They're angled in the direction of the trend. This is my strongest trigger look. This is the look that gets everything started. This is rule number 1 for a high probability trend trade. And guys, this is crude oil right now, just so you know where we're at. So I'm going to put indicators back on here. Maybe. I'm going to try and print real quick. And while those indicators are loading, I'm going to recap. I'm going to go to the manual. And I'm going to go to rule number 1. Remember, I don't keep secrets from you. My goal is for you to be successful. Rule number 1 says, in an uptrend, my small trigger lines are above the large are wide, they're angled in the direction of the trend. That space created lets me know, and I love this, the odds are favorable for the market to continue up. What a powerful phrase. The odds are favorable. In the downtrend, the small triggers break below the large are wide, they're angled in the direction of the trend. This space created between the two lets me know that the odds are favorable for the market to continue down. So when I talk about strong trigger lines, when I am identifying it on my chart, when I'm seeing it on your chart, you're going to hear me use the phrase odds favorable momentum. Every time you have it, type it on your chart, OFM. And in comparison, when those small triggers work back inside of the large triggers, we call this a weakening of the triggers. Anything can happen up or down. So ask yourself, if I'm going to put my money at risk, if I'm going to take my shot at a trade, do I want the odds to be favorable, or do I want to be in an anything can happen position? I hope that the answer is obvious and that was a rhetorical question, and you just want odds favorable. So strong triggers, we're going to break it down all by itself. Whoops. Can you tell that I copy pasted? That should read down. Strong trigger lines, smalls above the large are wide, they're angled in or below the large. This is rule number 1. That's me posting the wrong thing in the room. Let me delete that. If you only copy one part of it off of Snagit, it only posts one part of it off of Snagit. Sorry about that. I want you guys to save these pictures. This is your foundation. This is your fundamentals. That's odds favorable momentum down. And this is odds favorable momentum up, guys. It's a very simple look. Your job is to be able to recognize this. And I did it again, didn't I? One cup of coffee too many this morning, trying to get all that energy for you guys. Do me a favor, give me a Y in the room if you're with me, especially my brand new users. Odds favorable momentum. Rule number 1, giving yourself the advantage of a market that's likely to continue in the direction of the trend. What an outstanding way to start looking for a trade. Rule number 2, what was rule number 2? Let's look at the picture. You know what, let me give you a copy of the picture. Rule number 2 says that I can't have any termination conditions, guys. I have to have a clear path. Rule number 1 gives me the advantage of momentum. Rule number 2 is going to give me the advantage of a clear path. When do I have a clear path? Well, let's talk about when we don't first. What does a termination condition look like? Guys, if price, meaning these price bars, reaches an area, everybody see red Fibonacci resistance? If the price reaches resistance and all of my trigger lines remain below that area, guys, I'm trading directly into a termination condition. I don't have a clear path. And look at how the market reacts. It keeps struggling to break through. You're watching a fight here. This is when the market is likely to stop when the market is likely to stop. It may create a reversal. When is an area broken? Well, we're just going to keep doing this, guys. Live market all day. An area, this support is considered broken when both the small and the large triggers break below it. You'll notice that this blue line of support begins to act as a red line of resistance. This is when an area is broken. If we scroll back, this is when an area is not. So, going back to the manual, and we'll take one of the pictures straight out of the manual. This is your formula for identifying an area likely to stop the market. Your second fundamental as a brand new user. Price reaches the area. meaning the price bars come down, get right into that area of support. If your trigger lines remain above Fibonacci support, support's likely to stop the market. This is a termination condition. Rule number 2 has not been met. Therefore, if you're a rules-based trader, if you believe in the advantage of a clear path, you don't have a trade. Small and large triggers break below support. Now we have the advantage of a clear path. Now we have a market that has gone beyond and has not reached an area likely to stop it. So rule number 2 is going to keep you safe in a lot of instances, guys. It's going to keep you from trading into a truckload of resistance or support. Sam, even if the termination condition is 10 ticks beyond the profit goal, should you pass on the trade? If it's on the other side of your profit goal, Sam, why would you pass on the trade? If my goal is to get to 77.67 and 77.44 is down here, Sam, this is just a profit target based on the momentum. See that odds favorable momentum, guys? I can identify where the market's likely to go. Sam, 77.44 is a fantastic target with this much momentum. So I'm not concerned about what's in the future. I'm not concerned about what's in the distance. And Paul, when we talk about how much room is a clear path, most people, and everybody's going to have a different idea of what it is. Most people are going to have, they want about $200. So Sam, maybe this helps. Price has reached support. None of the trigger lines have gone through. Let's say hypothetically you were in the market up here at 80. Wouldn't this be a fantastic area to take profits? You see Fibonacci, you can identify where the market is likely to go. Does that make sense, Sam? And then let me compound. Am I worried about this fib in the distance when this fib is my profit target? And then Paul, I know that you're new here. Absolutely, Safia. When both the small and the large are below support, see how it turns red, begins to act as resistance. Once again, it reaches support. Both trigger lines break through. It acts as resistance. Both trigger lines break through. It acts as resistance. So this is when an area is broken. Great job. Termination condition. So right now, the small trigger hasn't quite made it through this area of support, right? So this is an area where rule number 2 has not been met. When the small trigger, if the small trigger breaks through this area, well, then we're in a position where the area has the potential to break. But until both sets of triggers get below this blue line, the area is not considered broken. Guys, give me a Y in the room if that helps. Price reaches resistance. Absolutely no trigger lines break through. No more long trades. Price comes all the way back to support. Absolutely none of the trigger lines break through. No more short trades. Guys, let it be black and white initially. Let it be the old Yoda. It either is or is not. There is no try. There is only do. Price reaches resistance. No triggers, no trade. Support, no triggers, no trade. 90% of what we do is waiting for an advantage. Reading our indicators and waiting for an advantage. This photo right here, Zeba. Watch this. Are you ready? Zeba, rather than cluttering up your computer with a bunch of saved photos, here's the link to the entire section on termination conditions. All the information you could ever hope for about what areas that we'll use, blue Fibonacci support, resistance, one-to-ones. Absolutely. And Zeba, I sent you a message. Let me know if you got it, please. Large chart midband if the triggers are a full bar away. All of these are your potential termination conditions, and then just below, we've got great visuals of how to identify them. And if you learn to identify termination conditions on a picture when the market isn't moving, embrace the formula. Price reaches an area, no triggers go through, termination condition. Price reaches an area, no triggers. It's a direct message here in Discord. If you go up to this little guy here, it'll probably have a 1 next to it, and that's me hounding you. And then once again, talking about termination conditions, guys. Even with odds favorable momentum, price reaches an area of support, none of the trigger lines break through, we've reached an area likely to stop the market. Keep it simple at first. Rule number 2 not met, no trade. You'll notice that this termination condition creates a reversal. Large triggers go from red to green. This reversal gives me odds favorable momentum, and that sets me up for the picture perfect trend trade, guys. This is what we call a strong bottom. When a termination condition creates a reversal, it's a strong bottom. When a termination condition creates a full reversal from the top side, it's a strong top. And if we go back to allowing ourselves to keep it simple, focusing on those high probability trend trades, when there's a termination condition on the 13.2, it's your best chance of success. All right, so once again, let's take a picture, because this one goes through everything that we hope for when identifying areas likely to hold and likely to break. Initially, price reaches support and absolutely none of the trigger lines break through. In the moment, that's a termination condition. All of my trigger lines are below. Whoops, drunk fingers. Area broken. All triggers below. So let's keep it simple there. Guys, give me a Y in the room if you're with me. When price reaches an area, no triggers go through. No trade in that direction, right? Let's give ourselves the advantage of a clear path. So let's talk about, remember we said that your ability to read charts is going to take you to that medium probability trade. It's going to take you to that where the small issue exists. When these small triggers break through the area, but the large triggers have not. Do you see that? Well, guys, now I have an area with the potential to break. And why does it have that potential? Because the smalls are through. Why does it have that potential? Because there's odds favorable momentum. This blue line may break. If I have the potential to break an area, but it hasn't broken yet, I can still take a shot at an entry over here. I can still look for a trend trade if the conditions are perfect. I'm going to give myself advantages there. So we see how every trigger line has pulled below the area of support, right? And now the market just pulled back and price reached 77.44. The laws of termination conditions say if price reaches an area and all of the trigger lines remain above it, that area is likely to stop the market. And it sure enough did. It bounced right off of it and continued down, and it pulled right back to it, and it appears to be bouncing again. Does everybody see that? 77.44 is a termination condition the other direction. The recipe is the same no matter what direction you're going. So if we just open up this, let's identify some terminations. 3 in a row right there, and look how the market heads down. Support almost to the tick, and it creates a big enough bounce, and then we wait for the area to break. Termination condition up top moves the market down. Odds favorable takes us through those areas, the same areas that held and pushed it right back up to the top. Price reaches a magenta divergence high. None of my trigger lines break through, and the market pushes down. Guys, this is what I want you to study initially. I want you to scroll back. You've got at least 10 days. I want you to go back. Quite a bit, Sam. And why is that? Good morning, Abdulaziz. Because these Fibonacci areas are a reflection of fear and greed. These Fibonacci areas represent every pivot in the market. When you open your software, it's going back and it's measuring every up, every down, not only on this time frame, but on multiple time frames, on synthetic time frames. It's projecting forward, it's going back. Guys, it's some crazy smart stuff that I don't understand. But what it does is it weighs and sorts, and when it's done weighing and sorting, it gives you these areas of support and resistance. Sam, why do we see that pullback so often? Because each of these areas becomes a line in the sand. And what you're seeing is a fight. You're seeing a fight between buyers and sellers. The buyers push up, and they see the line in the sand, and that just kind of happens to be the exact same spot where the sellers push back. And you can use those trigger lines to gauge momentum, wait for it to subside and change, and then take a great entry coming in. Absolutely not. Safia, so I'm going to write it out. A good top or bottom. Paul, I'm going to get there in just 1 second. I promise. Good question. So Safia, I want you to think of it this way. A good top. We'll do a good top. Where's it at? Here we go. And I'm going to type this into the room. A good top or bottom is a termination condition that creates a full reversal, okay? When I'm looking at good tops and bottoms, Safia and everybody else in this room, this is my look. Price reaches the area, all of my trigger lines remain below, okay? I'm not looking for overrun. I don't want my large triggers getting to the other side. This is a strong top in the market. And the other side of the coin is this is a strong bottom that creates a full reversal. And this picture lends itself. Safia, do you see how all the trigger lines have broken below support? It still ends up reversing. This would not be considered a strong bottom. It's not coming from a termination condition. Does that make sense? Awesome. So keep your standards high, guys. This is like high school dating. Keep your standards high. Let it be the right one. Let it be that termination condition. No triggers through, full reversal. Don't settle for a pivot from the middle of nowhere. Because typically when price doesn't make that key area, it might push up, but here comes that fight between buyers and sellers. They love to reach that key area. And if you start going through the charts, you'll see it. Price doesn't make that key Fibonacci support. It pulls right back to a termination condition. And then it works all the way down to that key area that they were trying to get to the first time. Siba, you're going to do fine. You're 3 days in, 4 days in. You're right where you need to be, I promise. But I'm glad that you're feeling better. And guys, it's pretty normal. The first couple days, you're going to be like, holy crap, what's going on? It says termination condition. I like it. Sorry, I just dropped a picture down. So guys, let's go through it. We have odds favorable momentum, right? Straight from the manual. Rule number 1 says that I must have the advantage of momentum. We've identified it. We've put it in pictures. We have absolutely no concerns with identifying it. Perfect. Rule number 2 says I have to have a clear path. What does that mean? That means that there's nothing in the way. We haven't reached an area The trigger lines are below or through the area. And now the magic, guys. Rule number 3 says that we're going to buy or sell a pullback at an area inside of favorable large triggers. And Paul, this is where the cool stuff happens, in my opinion. This is where Nexgen excels. We're going to use a limit order to enter the market at an area inside of favorable large triggers. This is the advantage of entering the market where it's likely to continue. So when rules 1 and 2 are met on the 13-2, remember that broad stroke of a brush, that one bar telling us that we have odds favorable momentum, that one bar that hasn't reached a key area. I'm going to focus my attention on the large triggers on my 5-1. I'm going to focus my attention on the areas that are falling within them, and those large triggers are coming up like a shark about to breach. The areas that we'll trade from. And guys, if you have a piece of paper in front of you, trade from areas. Let there be an area. Okay? The rules say that we are going to buy a pullback to an area inside of favorable large triggers. Areas can be fibs, mid bands, or 1-to-1s. But we have to buy a pullback. We're going to wait for the market to come to us. And I have a picture why. Our large chart is groupthink. Our large chart is the masses, right? The masses telling us that we have momentum. The masses telling us that there's nothing in the way. We want to get those yahoos that wish the market was going down to give us a little retracement, a little push down against all that momentum up. That starts with a reversal bar on the 5-1. So at the time of this reversal bar, you're going to create a window of opportunity. Paul, you're going to identify where the market is likely to continue. And that likely to continue extends from the highest point of support to the lowest point of support inside of favorable large triggers. So it doesn't matter what's going on this chart. I don't care about resistance up here or these little purple dots. I don't care about what's happened back here. My concern is identifying the areas within the large triggers, and that window of opportunity is from the highest point to the lowest point, and I'm going to activate a limit order right at the top of it. And then at that point, I'm powerless. Either it comes back to me or it does not. But if it does come back to the top of that window, remember, I'm in the market now. I'm in a long trade. I have the advantage of momentum on a higher time frame. I have the advantage of a clear path on a higher time frame. And now on this smaller, my refinement, my entry chart, I have whittled it down to an entry where the market is likely to continue. My initial stop will go below this window of opportunity where the market shouldn't go. And guys, I'll take this trade 1,000 out of 1,000 times because 70 to 80% of the time it's probable. I can't speak in absolutes because everybody's different. But what I've found is that when I've studied this, when my clients have studied this, when my students have studied this, this is a trade that typically wins 70 to 80% of the time. And right now you're asking yourself, well, gosh, Mark, if this is a trade that wins 70 to 80% of the time, doesn't that mean that I have to lose 20 to 30% of the time? Absolutely it does. This is a setup that gives you a statistical advantage. This is a trade that's been proven, a pattern that's been researched over 20 years. This is the look that creates the foundation, that creates the building blocks. Because what have we been able to identify with one simple trade? Are you ready? I'm going to pull up the picture, putting them side by side. You've been able to identify odds favorable momentum, and that odds favorable momentum carries you to where the market is likely to go. You've been able to identify termination conditions, and those termination conditions have taught you to recognize where the market is likely to stop. And then finally, by identifying areas inside of favorable large triggers on a smaller, faster charts, you've been able to identify where the market is likely to continue. Guys, these are your fundamentals. These are your building blocks of trading. 3 simple concepts on 2 simple charts, and these concepts will expand onto any time frame. These concepts will move forward onto any chart, any time frame that you want to trade. Guys, this is a 21-3. There's a termination condition just like it is on the 13-2. There's support to hold just like the 13-2. And here we see an area that's broken and the market pulled right back to it. That support acted as resistance. So I don't want you to be concerned about the time frames. I don't want you to be concerned about anything other than understanding these simple fundamentals, understanding when you have an advantage to take a trade. And let me show you how you identify this, guys, and we're going to do it right here. I'm going to put just the trigger templates on here once again, and we're going to walk through finding an entry, okay? Let's make this nice and big. All right, there's my 13-2 chart. And there's my 5-1 and what it looks like when the 13-2 is absolutely railing down. So let's go through this together, guys. Rule number 1 says that I have to have strong triggers, yes? Sam, let me answer your question. If you're in a downtrend, if all of the bars are down, your reversal bar is going to be green. If every bar is red, your reversal bar will be green. If every bar is green, your reversal bar will be red. So if I'm looking for a long trade, I'm waiting for a red reversal bar. If I'm looking for a short trade, I'm waiting for a green reversal bar. And we're about to see that right now. Guys, rule number 1 is met, yes? Strong triggers, small below the large are wide, they're angled in the direction of the trend. Can we all agree that the odds are favorable for this market to continue down? What a great feeling going into a trade, right? So let's make sure that rule number 2 is met. Rule number 2 says no termination conditions. Price can't reach an area that the triggers haven't broken. Have we reached an area on the 13-2? Do I have blue Fibonacci support, 1-to-1s, right? There's no cyan divergence low. I've reached nothing. I have clear sailing all the way down. Look at that. Strong triggers, nothing in the way. Guys, rules 1 and 2 are met on the 13-2. Give me a Y in the room if you're with me on this one. That's it, right? Rules 1 and 2 are met. So now, what kind of chart is our entry? Is our 5-1? I want you to type it in so it sticks to your brain. It's an entry chart. It's a faster chart. Absolutely, Safia. We're going to whittle down what we see on this one bar to the area where the market is likely to continue. So Sam user, what are we waiting for to find our window of opportunity? As this market continues down, as this market keeps pushing with odds favorable momentum, as this 5-1 is working its way down, and I'm starting to get nervous. Not a termination, Zeba. Good. Safia, we're waiting for a reversal bar. Remember, Zeba, we don't want a termination condition. That happens on the 13-2. Paul, absolutely. I'm waiting for a green reversal bar. So, Zeba, this tells me no terminations. 13-2 tells me tons of momentum. We're only looking for an entry. I'm not worried about terminations. I don't care what happens back here. Hell, I don't even care what happens down here. All I want is to see one up bar so I can identify a window of opportunity. And guys, this is where you're going to get nervous. Look at it go. Oh my gosh, it's going without you. How are you ever going to get a trade if you don't get a reversal bar? There it is. Takes a little patience, right? Your fear of missing out is going to go full tilt right in this area here. But remember, I have the advantage of momentum and I have nothing in the way. The crowd says we're going down. I need these yahoos willing to fight trends and triggers to give us a little pushback. So here's my reversal bar. Two things I'm concerned about. Identify your large triggers. Where are they? From the bottom of your large triggers to the top of your large triggers, guys. They're favorable. They're in the direction of the trend. They're strong. They're down. It's like a shark about to breach. Guys, give me just 1 second and we're going to find this entry. Hold on 1 second, please. Trading is important, but kissing your wife goodbye is even more important. So we have the reversal bar, and we've identified our large triggers, right? They're down, they're strong. Everybody with me so far, right? So how do I identify a window of opportunity? The trigger lines aren't my window of opportunity. My window of opportunity is from that lowest point of resistance to the highest point of resistance. And guys, look how small that window is. From the lowest point of resistance, that mid-band, to the highest point of resistance, those one-to-ones. They're inside of favorable large triggers. Do you guys want to know the truth? When I have that reversal bar and my rules are met, you know what I'm looking at? That's it. That's my focus point right there. I'm not concerned about the fib above it. I'm not concerned about the fib below it. I couldn't care less about anything else in the world other than that area of resistance inside of favorable large triggers. And my rules say activate a limit order at the bottom of that window, a tick or two below that lowest point of resistance. Is everybody with me on this? My 13.2 says that I'm screaming to the downside. My 13.2 says there's nothing in the way. But Mark, what about that blue fib? Ziba, where do we look for termination conditions? What chart? Sam User, where do we look for termination conditions? 13.2. Absolutely. So am I scared of this blue line? Absolutely not. And when it's time to do that limit order, I don't know where the market's trading currently. If I am below the current price, I'm going to right click and I'm going to hit sell limit. And now I'm waiting for the market to come back to me. And it's either going to or it's not. I'm not in control of that, but here it comes. Do you see that mid-band moving down, guys? It's okay. Whoops. Adjust your entry. Keep it a tick or two below. Don't trip over pennies. You have the advantage of momentum. You have the advantage of no termination conditions. And you have the advantage of this little window of opportunity letting you know where the market's likely to continue. And the market pulls up. And once again, I might adjust. I'm not going to miss this trade over a tick because of all the advantages I had. And guys, there it is. It caught me right to the tick. 77.66. You're now in the market. But do you see how I adjusted? As my mid-band came down, so did my entry price. And it came right to the bottom of the window of opportunity. And I'm in a trade. My initial stop when I enter the market is beyond that window where the market shouldn't go. When I get a reversal bar in the direction of my trade, I can go a couple ticks above it. I've now reduced my risk. We're going to talk about a management plan today that has you looking for $100 on the first contract and $200 on the second, which means that from 66, I have to get to 56. Guys, I'm already $100 in the bank. And if I get to 46, that's a $300 trade. Look at that. Based on simple fundamentals, the advantage of momentum, the advantage of a clear path, and then taking the time to study to figure out how to identify that entry. There's a lot of noise that happens on a chart. I want you to see something. How do I study, Mark? How do I get comfortable with this look? When I have odds favorable momentum, when I have no termination conditions, I'm going to circle any tails that I see on the 13.2. Watch where this shows up on my 5.1. Boom. Area of resistance inside of favorable large triggers. So if you're a brand new user, this is your job, guys. I want you to embrace the work. Your job's to take a picture of that perfect trade, even if it's after the fact. I'm going to put a high probability trend trade checklist on it. I have odds favorable momentum, I have no termination conditions, and I had an area for entry inside of favorable large triggers. Guys, this is my best of the best trade. This is your foundation, this is your fundamental, this is your building block to teach you to read your indicators, to teach you to understand when the market is likely to continue, to be able to recognize where the market is likely to go, to understand when it's likely to stop. Give me a Y in the room if you're with me. Guys, on day one, you're going to see this, and you're going to mess it up a couple times. But if I take that best of the best picture, right, and I upload it to screencast, awesome. Paul, I hope everything goes well. If you need anything, you can always reach out as well. Guys, I'm going to take that perfect picture and I'm going to put it into a spreadsheet. And I'm going to call it the perfect trend trade short, and I'm going to come back and I'm going to be able to study this picture each and every day. So we've talked about the rules, right? Let's put some indicators back on there. We've talked about the rules, the advantages that they provide. Guys, I want you to embrace this. Can you keep it simple? Can you look for momentum, a clear path, and then identify an entry area? Do you need to know about anything else initially? I don't think so. Let's keep it simple. And guys, as we go to the live market, this is crude oil. What do we see in the moment? We see strong trigger lines. Does everybody see it? Smalls above the large are wide. They're angled in the direction of the trend. I've got one of those Fibonacci areas, 1-to-1s. Guys, have my trigger lines gotten above the 1-to-1s? We're just chart reading right now. Remember, we're not looking for it. No. So Ziba, when I consider an area broken, I want both of these lines. I want both of these lines above that area. Does that make sense? If both of these small trigger lines haven't gotten above these 1-to-1s, guys, rule number 2 isn't met. We're not looking for a trade. So the only thing to do is wait. Either everything's going to go above it and we'll look for a long, or maybe this termination condition is going to create a reversal. So Josh, 2 schools of thought. Absolutely. Gary, simple process. Price reaches. Where are the triggers? So let's look at it. Let's freeze frame it real quick, okay? This is the bar. where price reaches the one-to-ones. Give me a Y in the room if you see it. Price bar has come in contact with the one-to-ones. Yes. Where are the trigger lines? They're all below, correct? Awesome. So this is a termination condition. Let's make it clever. There's a stop sign. And let me find it. Cool. Price reaches, none go through. And we're there. Guys, here, the small triggers have broken through, right? But the large triggers are above. Give me a Y in the room if you see it. Josh, this is a 50-50 look. And guys, that has nothing to do with your chances of success if you take a trade. All 50-50 looks, you can call it a straddle, a one above, one below. I don't care what you call it. But the understanding, when the smalls have completely broken through an area but the large have not, is that this is an area, it's a very powerful word, with the potential to break with odds favorable momentum. But it has not broken, right? Exactly. So once the large get below, Josh, if it's a 50-50, pause for a second. If you're looking for an entry, make sure that it's perfect. But it's not until both the small and the large break through that it's go time once again, that we go from 50-50 to high probability. Does that make sense, everybody? So what did we see currently? Those small triggers never got through, did they? Look what your market did. Thank goodness you didn't try to get in at a mid-band. Do you see it? Pretty amazing, isn't it? Guys, rule number 2 gives you the advantage of a clear path. So Josh, your question was, do I wait for the big triggers to push as well? Well, if I have a 50-50 look, meaning that the smalls have broken but the large have not. I think I had a picture of it, right? Let me find that picture. Here's an example right here. Notice how the large triggers haven't quite made it through that area, guys? But the smalls are up and there's odds favorable momentum. Does everyone see how this is a 50-50? The area has the potential to break based on momentum, but those large triggers at the time of the pullback haven't gone through. Give me a Y in the room if you see it. Guys, this is your first medium probability trade. When you get beyond only high probability trades, Josh, there is an instance where I will still take a trade. Safia, the large triggers haven't broken through yet, not 100%, but the small triggers have, right? Cool. So we'll look at it again. I've got a great picture here. The small triggers have broken through, but the large triggers have not. This is a textbook 50-50. Let me give you this picture in the room, guys. And let me remind you, too, that you're going to see it, you're going to get it, you're going to forget it, and then you're going to see it and you're going to get it again. And it's seeing it over and over. Repetition is key. So when I have a 50-50, when I have a trade with the potential to break an area with odds favorable momentum with nothing on the other side of it, Josh, this is the look that will get me into the market. No divergence on my pullback on the 5-1. Absolutely strong triggers. Smalls outside of the large are wide, they're angled in the direction of the trend, and a small, concise window of opportunity. It's still a medium probability trade, right? It doesn't have that 70 to 80%. So if I'm going to take a shot at an area with the potential to break, well, then my smaller, faster chart better be beautiful. It's a 50-50 for red termination, but strong bottom. Nope. So Sam, 50-50 has nothing to do with color, okay? Good question. 50-50 has nothing to do with color. It has everything to do with the position of the triggers. If one is through and one is not, it just means that the area has the potential to break, but it hasn't broken. Doesn't matter whether it's resistance or support. Does that make sense, Sam? And then when we talk about a strong bottom or a strong top, what we're looking at is a strong top is a termination condition that creates the full reversal. And a strong bottom is when a termination condition creates a full reversal. Does that make sense? And then here you can see after that termination that creates a full reversal, there's a 50-50. And if you wait for both triggers to get above resistance, now you have that high probability trend trade. Pretty cool, right? And guys, what kind of trade is a 50-50? It's a medium probability. It will take time to apply, Ziba. It's a medium probability trade. What's your focus for 30 days? And guys, this is why I do this every day. Do you know what the hardest thing about my job is? Is getting you guys to reel yourself in, to harness all that excited energy and focus on the high probability trend trade for only 20 trading days. That's all I'm asking. Give yourself 20 days to keep it simple. Give yourself 20 days, 20 trading days to look for the absolute best of the best so that you can understand where the market is likely to continue, where the market is likely to go, and where the market is likely to stop. Does that make sense? Don't be in a hurry. You're gonna get there, I promise. And I want you to see something. Guys, I did a lot of study this morning. You're embarking on a brand new journey, guys. You're coming into a new career. It's gonna take time. Let it. You're going to feel new. You're going to feel unsure. It's normal. Embrace the simplicity and you'll have the skill set to make money on your journey to mastery. And that's the difference between day trading and becoming a doctor, becoming a lawyer. Is if you focus on the foundation, you'll have the skill set to make money before you reach your end goal of mastery. But you have to focus on the fundamentals. You have to focus on that solid foundation. Guys, it takes 10 to 14 years to become a doctor, 7 years to become a lawyer, 6 to 7 years to be an engineer, at least 4 years to be a teacher, 2 to 4 years to be a nurse, and upwards of 24 years to become a CEO. Don't put those unrealistic expectations on yourself to be a 100% profitable trader in the beginning. Gary, are you on 7 or 8? And guys, does that make sense? Let's focus on the best of the best. So Gary, when you do that, go to Tools, Options, General tab, where it says Confirm Order Placement, uncheck it, and that'll get you squared away. Tools, Options, uncheck Confirmation, and you'll be good to go. All right, guys, so that was my little soapbox. We're going to keep it simple. Going to focus on the best of the best. Large triggers are up and small triggers are down. Is rule number 1 met? New users, pop quiz, chart reading. Is rule number 1 met on my 13-2 chart? Do I have odds favorable momentum? No worries, Gary. No. Jason, perfect. Jason, if rule number 1 isn't met, what should you be doing? If you're brand new, if you're focusing on the best of the best, waiting. Doesn't cost a penny to wait, guys. doesn't cost a penny. And you know what's cool? Do you see how the small triggers are breaking above, the large triggers haven't? 50-50 trade. I got a tail. No divergence, strong triggers, pulls right back to support. If you're patient, it's going to happen, right? Everything is broken below the area. What did it do over here? Well, it pulled right back to resistance inside of favorable large triggers. If you're patient, it's going to happen. All right, Abdulaziz, I'm going to take just a second. Everybody, I'm going to take just a second. I'm going to leave you with the live market here. Let's see what the ES is doing. We had some odds favorable on the way down, didn't we? We had no terminations on the way down. I wonder if it was an entry. 6:35 a.m. Oh, that's back a little bit, isn't it? That's historical. Holy smokes, guys. Right to a mid-band, right at large triggers. If we go to the current, once again, guys, I can't make this stuff up. I've identified momentum. I've identified where the market is likely to go. I've identified where the market is likely to continue, and doggone it, it did everything it was supposed to do live in front of you. And it went straight to the termination condition. Give me a Y in the room if you see it. Your job now is to practice it until it becomes second nature. Pretty cool. Let's see what happens in this little area. I can't go long into resistance, and I can't go short into support. My only option is to hurry up and wait. Guys, I'm going to take a few minutes. When I come back, we are going to look at the charts that you guys have posted. We're going to keep looking at the live market. We're going to talk about injuries. We're going to talk about everything. We're going to do that bar by bar over and over until you guys are so stinking comfortable you can't stand yourself. I'll be back in just a second, y'all. Start looking at some of these charts. So class is two parts, right? We're going to talk about rules, and then we're going to talk about what you're doing and how you see rules. So I'm going to scroll up to the very top of class, and I'm going to see what's been posted. And I know that Bobby posted some pictures for us this morning and did a great job with it. I'm going to bring up his first one. Guys, we're going to do this. Every time I pull up a picture, of course it belongs to whoever posted it, but the lessons are for everybody. So if you have a question about something that you're seeing, let me know. Let's see what Bobby did here. And notice that he's using a checklist. Is the market coming from a good top or bottom? Look at that. A termination condition creates a full reversal. Absolutely it is. Does he have odds favorable momentum? He most certainly does. No termination conditions? Well, that's true as well. He's using a checklist to verify his rules. Did he have an area for entry inside of favorable large triggers? He had a mid-band right there at those large triggers. A tick below, he's willing to take that trade with all of the advantages present. And I can tell you this one finished the move. Bobby, absolutely beautiful trade. 100% rules-based, no fear, no anxiety, no trepidation. A simple focus on following the rules and hitting the correct entry. And then my other favorite picture, and I love these pictures, guys. I want you to take 1,000,000 of them. Same checklist, right? It's coming from a good top. Odds favorable momentum. What do you guys recognize about his chart where he's pointing? It's a 50-50, right? That's one of those trades where the area has the potential to break, but it has not. He has a loss of momentum 3 times. He doesn't have strong trigger lines. And he says that he thought about going short here, but it didn't meet his rules. No divergence on the 5-1, unless with strong triggers. Since the triggers weren't strong, Bobby stayed out of the trade. Guys, I love this picture because it's not a trade. It's a confirmation that he's a rules-based trader. And this is Bobby saying, I don't care what happens next. If my rules aren't met, I don't have a trade. Those are my favorite pictures. Those are chart reading pictures. Those are reaffirming that you're able to follow your rules. And guys, those are the ones, even though you never pulled the trigger, you're creating good habits with that analysis, with that posting, with that rules following. And it helps a lot. Gary, pivot from space, and it's right back to the mid-band. There was one with no divergence. Remember? Strong triggers, no divergence. Look at Gary's entry, guys. Do the rules work? Is the software valid? Absolutely. Gets in, quick profits. Then he has loss of momentum right into that termination condition. 77.65 was a termination condition. Guys, that's a 12-tick difference between taking profits in an area likely to stop the market and hoping that an area breaks. Gary, great trade. I think you gave back a lot of money right into one-to-ones without trigger lines anywhere near them. Just a little management piece as you keep going. Abdul Aziz, let's see what you got here. You've got lots of them. Pre-trade. Nope, that said pre-trade. So we're going to look at 13 twos and 5 ones. Smalls above the large. The large are up, but they're kind of flat. You had an area for entry, and this one just didn't work, Abdul Aziz. No worries on the long. You had momentum. Were you coming from a termination condition? Can't tell. Ooh. course, I have to ask, at 9:54 on this larger time frame, Abdulaziz, if you're going to use this tool, what about this chart made you feel like it was time for a long trade? Does that make sense? Guys, remember that we start on two charts, 13, 2, 5, 1. The midband on the 21-3 holds. So when Abdulaziz, and thank you for the answer because that gets us to a lesson. Large chart midbands are considered termination conditions if the large triggers are a full bar away. If you run into that midband and the large triggers are a full bar away, then this midband acts as a termination condition. What we see on your picture is as it reaches that midband, you have odds favorable momentum to the downside, and those large triggers are right on top of it. Nothing suggests that this market is looking to the upside. And then if you come to your 13.2, they're a little flat, but it looks perfect on a 5-1, right? On a 2-chart look, I love it. Take this trade all day long, Abdulaziz. But if you're going to add in those other charts, use them. Nothing says up here. Does that make sense? Because it's the same patterns. It's that same strong triggers. Great picture. I love it. And now when we go to the other side, now we have that odds favorable. And see how this supports this, which supports this, which created a very easy win for you. Guys, I'm a big fan of all your charts giving you the exact same information to get you where you want to be. And then there it is on same trade. Small's below the large. The large are wide. They're breaking through the area, but they haven't broken. You take a perfect entry. I love your exit. And then Abdulaziz, let's look at the information on the 5-1. So let's turn this into a management picture because your entry is perfect, right? Love everything about your entry. One loss of momentum says that the market could make a little switch on you, right? But not a big deal, not huge. But when you get this second loss of momentum, do you see the small triggers? Do you see how you've gone from odds favorable to anything can happen? So what's the small chart telling you? The small chart's giving you the information that you need to identify change that's happening on the large chart. The large chart has an area with the potential to break, but it hasn't yet broken, which means it's a 50-50. The small chart is showing you losses of momentum as you come into an area with the potential to break but hasn't broken. Does that make sense? So when we go back to and we talk about what's my perfect entry on a 50-50, it looks very much like this. And the more slowdowns I get, the more I'm giving away advantages. I'm giving away the advantage of a clear path because it only has the potential. And I'm giving away the advantage of momentum because that smaller chart is letting me know that I'm losing momentum. And we can use that small chart for management when we identify the divergences, the losses of momentum on that smaller chart. Because 3 divergences in the same location can end a trend. It's when the small triggers work their way inside and we see the area, the loss of momentum, the triggers change. This can signify change. So let's look at yours. And let me get that picture. Small triggers have gone through without question, right, Abdulaziz? Like 100%. Odds favorable. Have your large triggers made it through the area yet? Do you see how the large triggers haven't quite cleared that area? They're trying to. It's almost there, but it's not quite. And trigger line location has an awful lot to do with whether or not an area is broken. Does that make sense? So when it's still in that 50-50 status, that's where I'm looking for that great entry. And I love your entry. But notice how your areas are starting to be above the large triggers. And then as you get those divergences, notice how the small triggers work inside. This second divergence with the triggers inside, you could have taken a really nice exit somewhere right about here on that third bar, gotten paid on both contracts. It's a great picture. A lot of great information in that picture. Guys, this is exactly what we do every day. Show me what you're doing, show me why you do it, and let's talk about it. And then what happens? We get that 50-50, right? And it ends up pushing up. Those flat triggers, once again, kind of 50-50, starting to come over. No real strength. And I think that this is kind of a subtlety. This is something that takes a little bit of repetition. When we talk about the best of the best trigger look, let's go back to it. I take a lot of pictures, guys. I hope you will too. For a long trade, see the large triggers? Wide, angled up, just absolutely cranking. That's my best look. When they're still kind of flat, you may be at the beginning, but you're not sure. So you're a little flat. Whoops. And then this is the same one that we talked about. When it's a little flat, notice how far away price pulls as well. Your entry is perfect. Your stop can go below that window of opportunity, which means it really doesn't need to be much beyond 56. If it drops down here, the trade's probably not working. Another great picture. I like that you're keeping busy this morning. And there it is, the after trade. And sometimes, guys, remember, the rules are going to be met. The entries are going to be perfect. But anything that wins 70 to 80% of the time has to lose 30. Same look, smalls down, flat triggers, in at the area. And then that one works like a champ, supported by that 21. Abdulaziz, great trading this morning. I think this long was valid based on two charts. I think using that 21 might have kept you out of that long. Just doing that trickle down. If this says down strong and this isn't coming from a great area, doesn't say up with crazy strength, maybe not the best of the best. So great trading this morning. You're killing it. And guys, I get happy when I see you guys come back, doing what you do, growing with the software, seeing things more clearly. Safia, let's see what you did. All right, so we have, you got stopped out. All right, Safia, I like this. You used a checklist, didn't you? Tell me what rule you broke on this checklist. Do you see it? Did you have odds favorable momentum? Absolutely. No termination conditions. You checked no, which means what? It meant that you willfully gave away your advantage of a clear path. Do you see it? Your entry was beautiful. but your path wasn't clear. So you took a shot trading into this fib, and it didn't work out for you, did it? And look at that. There's 1, 2, 3 divergences. So your exit is beautiful. If you're going to trade into that termination condition, you saw the change, you exited the trade. I like that. Let's celebrate that. And remember, give yourself that clear path. Guys, a clear path will change your day. I promise it will. Bobby T. And then Safia. There's that one that got you to the termination condition. And sometimes, guys, if there are 10 potential trades during the day, let's say there's 10 setups during the day, and on 2 of them, you talk yourself out of them, right? You're like, oh, the rules are met, but I don't feel right. So now you had 8 potential. And then out of that 8 potential, let's say that, I don't know, 6 of them win, right? 75% winners. That's great. That's 6 potential winners. But then you trade into a termination condition once, and it eats up one of your winners. And then one time you do it without odds favorable momentum, and it eats up another one of your winners. And then you jump in way too soon and get stopped out, and it eats another one of those winners. So there's 2 parts to being a successful day trader. The first thing is having a set of rules and committing to those set of rules. And if you're going to commit to a set of rules, you have to believe wholeheartedly that they create a statistical advantage. And if they create a statistical advantage, you are obligated to take that trade every time it sets up because you know you're going to win more than you lose. So when you miss this one, but you take this one, right? Missed this one, take this one because you're feeling left out about this one. Now you're negative P&L rather than positive. And it takes time to trust things, guys. It takes time to put yourself in that position where you'll take these trades every time they set up, and it comes through repetition. All right, Dave B., you say that it seems like this happens to you daily. All right. So Dave B., did you have odds favorable momentum? Are you with me, Dave B.? Cool. Did you have no termination conditions? No termination conditions. Did you have an area for entry inside of favorable large triggers? Yes. So Dave, what were your odds of success on this particular setup? 70 to 80? 80-20? Cool. It's cost of doing business, Dave. If you take this exact same setup 100 times, how many of those do you suppose you'll win? I feel comfortable saying that with those conditions, based on my back testing, my study, the time that I've put into it, I'm going to win that one probably 70% of the time. Dave, you did it perfectly. Just like Abdul Aziz. You have to be okay with the idea that a percentage of these aren't going to work. Let's look here. And guys, this is why we post. Same conditions, right? Strong, nothing in the way. Pull back to an area. There's a winner. Let's look at another one. Strong, no termination contenders, pull back to an area. There's another winner. And then guys, this is my spreadsheet. I want you to see something. Dave B, even from my spreadsheet, strong triggers, no termination conditions, got run over. Look at that. Everything says up. Absolutely kicked my butt. I'll take that trade every time, Dave B, because of the statistical advantage. And guys, you begin to trust that advantage when you do exactly what I did. When you take a picture of that setup working so many times that you just don't care if you lose one, Dave. It's hard to get to that point. John Novak used to say, I don't care if I win. Couldn't care less. All I care about is whether or not I followed my rules. All I care about is whether or not my execution was spot on, taking trades that provide me a statistical advantage. That one didn't fill you? Yeah, that was close, wasn't it? And now what are we identifying? How many of you have been chewed up in consolidation? How many of you have been absolutely annihilated in a choppy market? I have. My hand's up. You ready to use Fibonacci to see it? Price pushes to resistance. It's a termination condition. No trade. How do our rules keep us safe? Market pushes back down. I don't have odds favorable momentum. No trade. All the way up to a termination condition. No trade. Termination condition. No trade. Termination condition again. No trade. Termination condition. No trade. Guys, I can say without question that for me to feel comfortable putting my money on the market is I better break out of this range that's been established by people with much deeper pockets than me. Does that make sense? You can see it. Your rules keep you out of the trouble. It just means you have to be patient. So until this termination condition breaks or this termination condition breaks, my chart might as well look like this. I'm not even going to bother with it, guys. Because I don't have to figure out what's going to happen. My job is to look at what has happened. I have had odds favorable momentum. I do have an area likely to break. Pretty cool, right? I don't have to guess. Guessing's for fortune tellers. Gary, you say 50-50 with divergence, not taking it. I like it. A lot of information to not get into that market. Smalls are above, but it was weak. And look at the split on these triggers. Isn't that ugly? What's a favorable large trigger look like, guys? What's it going to look like when it's the absolute best? You're large, you're synthetic. Guys, they're trending one on top of the other. Tiny little window of opportunity. One on top of the other. Tiny little window of opportunity. What is this nonsense? They're so far apart. Ah, Gary, great job staying out of that mess. And then it breaks. Smalls below the large, larger wide, angled in the direction of the trend, coming from a termination. And Gary, I don't think anybody got filled on that one. But look at where your entry is. Sam, I'll address that right now, okay? But first, Gary, your entry is above the lowest point of resistance inside of favorable large triggers. You're tripping over pennies to save dollars. This is why our entry, our limit order waits below the area of resistance inside of favorable large triggers because you have a freight train of momentum pushing that thing down when the rules are met. Good luck. And that still might not have gotten you, but you're definitely on the wrong side of things there. It's okay to adjust that entry. And now we're losing momentum, areas on the wrong side of things. And you say confirmation would take 10 ticks to get you in. And Gary, is that a market flow signal? So, Gary, after you place the trade, right? If I'm looking for a long, can I click that line and move it anywhere I need to move it to keep it above or below that area? Remember, guys, just because it's there, you can still move it. You can still move it. What's next? Gary. That's the same one we just saw. All right, Sam User, are you ready? Let's talk about enough room. Using a lot of pictures today, guys. I love it. I love it. I love it. Let's do it like this. Let me find a great picture. Bum, bum, bum. All right, Sam. And here's the key to finding the room. You have to decide how much you need to be willing to make on a trade, right? General consensus is I want to be able to make at least $200. Does that make sense? You good with that? Feel like a good number? Awesome. So here's the top of my bar, Sam. Here's my potential target, my trouble spot. Do you see it? From the top of my bar to that trouble spot is 8 ticks. That would be absolutely ridiculous, wouldn't it? Who's going to risk 12 to 14 ticks to make 8? But Sam, how do we enter the market? We enter on a pullback to an area. So in reality, our profit potential is from our area of entry down here at 85, which means now I have about $200 worth of profit potential to get up to that spot. Does that make sense? And that's how I determine. I stayed out of a lot of trades as I got close to areas because my brain kept forgetting that I'm waiting for a retracement. I may be close to 77.44, but when I pull back to 77.66, I've got plenty of room to get back to that trouble spot. So Sam, if you remember and embrace rule number 3, if you wait for that pullback, what's it do? It lets you minimize your risk and it lets you maximize your profit potential. Did that clear it up a little bit for you? Awesome. These are great questions. And guys, I'm going to tell you, keep asking them. I don't care if you're curious, Mark. Why does that number keep changing? If you're wondering, ask it. Bobby, busy day? Busy days are good. Keep you out of trouble, right? Sometimes. All right. I'm going to pull up an example plan. Guys, we're going to go into story mode for a second while the market's working itself out. There was a time when I was a much younger man with much less gray hair. I road raced motorcycles. I used to road race 600s, and there was an instructor out of California. His name was Keith Code. And Keith Code used to say that when you're racing motorcycles, pretend that you have $10 worth of attention. So when you're day trading the market, you have $10 worth of attention. Thanks, Ziba. I act like it too. I'm 50. So what does that mean? $10 worth of attention. As you're a brand new user, let's pull up this picture. If I'm a brand new user, $3 worth of my attention are going to go to recognizing odds favorable momentum. As I'm brand new, $3 of my attention are going to go to identifying no termination conditions. And then guys, because it's a little more, probably $4 worth of my attention are going to go towards identifying my entry, right? 3 very basic concepts to get into a high probability trend trade. Guys, if I'm brand new, how much money do I have left over to manage a trade? I've got none. This is why for your first 30 days, focus on your entries. Does that make sense? I stink at analogies, guys. I know that I do. But does this make sense? I have $10 worth of attention. 3 of it goes to rule number 1, 3 of it goes to rule number 2, and 4 of it goes to finding the area of resistance inside of favorable large triggers. Guys, this is day 1. Eventually, you're going to spend $1 to recognize odds favorable. It's going to take you $1 worth of attention for no termination conditions. And maybe it takes you 2 to find that entry. Does that make sense? So how much do I have to focus on management now? Now I've got $6 worth of attention to begin to manage these trades that I've gotten into, because now my entries are second nature. There's a lot of information on the charts initially. If I focus on the rules being met, and I keep my focus on what's important, not worrying about these 1-to-1s or this red fib, not worried about this blue fib. If I keep my focus, my attention on the best of the best entries, that's going to pay dividends down the road. That's going to put me in a position to where I can manage my trades. Oh, I didn't, Elvis, but that worked out. So how do I focus on the best of the best? Guys, you're going to write a very simple plan. I'm going to give you a very simple plan, and your job is to embrace this like your trading health depends on it. Focus on putting your attention where it's most important in the beginning. Focus on odds favorable momentum, focus on no termination conditions, and focus on your entry. I'm going to say it again for the people in the back that think that they want to make money on day 1 on simulator. Focus on your entry. Focus on identifying the best of the best, guys, and that's what this plan does for you. My trade is the high probability trend trade. I personalize it. In order to enter this trade, I must have the conditions of the checklist met. Not I hope they're met, I think they're met, I want them to be pretty close to met. Hold yourself accountable to the checklist for your first 30 days, to creating that skill set that's going to take you to the rest of your life. In order to pull the trigger, this checklist has to be met. Guys, I'm going to give you a copy of the checklist right now in the room. I want you to save it to your computer. And I'm going to give you a copy that has just words on it, one that you can print out and put on your desktop and give yourself check marks and police yourself every time. And I'm also going to give you a copy that have pictures of what every one of these rules mean. Straight from the manual, straight from the user guide. Guys, I promise you when I tell you, I don't keep any secrets from you. In order to take it, the checklist must be met. Here's pictures of that best look right here in my plan. If I click on that screencast address, it is a 100% picture perfect, rules met, high probability trend trade. Put it in your spreadsheet. That picture was compliments of Gary. I stole that from him in class a long time ago. That's your recipe for success. That's your foundation, guys. This is where you're going to spend $10 worth of attention for your first 30 days. Can you do that? Can you commit to the best of the best for 30 days? If you've come back to my class because you need help with consistency, if you've come back to my class because you really want to put yourself in the best position for success, give it 30 days, guys. I've never had anybody trade this checklist for any amount of time. Consistent, sticking to it, not breaking the rules, and do worse than 70% winners. Quarter of a page to give you the skill set you need to take you to the rest of your life. And then when you have that, When the money that you spend, when your attention leaves you $6 left over, add a medium probability trade. Add that 50-50 trade. But guys, don't stress yourself out spending money trying to determine divergences, whether the triggers are strong. Keep it simple, keep it direct. If I take a 50-50 trade, no divergence will be present. Small triggers will be outside of the large. Remember, foundations take you to the next level. Take a picture. What's it look like? How many of you lose 50-50 trades with multiple divergences, hoping that an area breaks? I did it for a long time until I went back and took 1,000 pictures of 50-50s and I realized that this was my best look. But if this divergence prints, Safia, don't you have to start analyzing more? A second divergence prints, don't you have to start analyzing more? Now I have to look at divergence. I have to look at trigger location. I have to make sure that I still have a window of opportunity. I have to look back over here and say, hold it, how many areas aren't broken? Where's my problem? There's too much going on for the new user. Guys, keep it simple, please. It doesn't have to be difficult in the beginning. Stay focused. Do this. And what are we looking for? We're looking for entries. How many of you are on Simulator as you learn the software? How many of you are taking advantage of being able to use Monopoly money, right? Guys, make every mistake that you can make. Take every trade that you think you see, but you have to annotate it and put it in the room. So, okay. Ziba, I want you to go to your search bar and I want you to type in capture, okay? Because I'm pretty sure you have this, and I want you to open your TechSmith capture. Guys, if you've never posted in the room, if you've never posted a picture, I need you to post. Right now, I want you to click that giant red capture button. And if you hover over one chart, it's going to take a picture of one chart. So what I want you to do is left click at the upper right hand corner and drag it all the way down to the bottom right and release. And once you release, click that capture an image. And guys, here's your image preview. This is how we have a conversation. If you're serious about wanting to be a day trader, if you've come to Nexgen because you want the coaching so that you can read the indicators, don't omit this step. Take a picture and post lots. I want you to use arrows, and I want you to show me what you see. This was a termination condition, no trade. This is an area that's broken. That's a mid-band. This is resistance. Hey, Mark, was this a trade? Were my rules met? And I want you to use this call out button. This is how you talk to me, right? Tell me why you did what you did. Ziba, you're making me proud. Upload it. Copy that link and just like Ziba did, post it in the room. Ziba, if you go to your search bar and you type in Ninja, no Ninja traders come up? Give it a try real quick. Oh, but do you have the demo account yet? Did you guys load a demo account? Okay, cool. I'm excited for you to have software so that we can get you going. Guys, if you've never posted a picture in the classroom, post one for me now. Doesn't matter what it is. I don't care if it is... Ah, these horses are beautiful. Are those your horses? Ah, horses are scary, but they sure are pretty. So Zeba, now I know that you can post a picture, right? Now I know that you're capable. So I want you to practice. The second half to taking a picture, guys, is being able to record it into the spreadsheet. This is your trade tracking sheet. This is provided by Nexgen. Can you guys hear me? Okay. Sam, thank you. Perfect. Guys, you're doing it great. Sam, remember, you don't need to see this much. I know that you're just doing an example. Don't confuse yourself. How many dollars of attention does it take to process all of that when the information that we need is on that most current bar? Pretty cool, right? So don't be afraid to consolidate. Make it go where it needs to go. Guys, look at this. Anything can happen, triggers. 1 divergence, 2 divergence, triggers inside, and it blows right past, doesn't it? Gave up momentum, and it pulls right back to resistance, and all my triggers are below. That's scary, Elvis. All right, so we take the picture, and now we're going to go to our spreadsheet, guys. We're going to go to, and again, this is on your computer if you're brand new. Trade tracking sheet. 3 tabs on a trade tracking sheet for you guys. There's the first tab. Everything that you do goes in here. Every time you take a trade, win, lose, or draw, it goes on the first page. And you're going to right click and you're going to put that screencast address right in here. And we're going to turn it into a hyperlink. See how these tell me what happened? I'm going to do the same thing with this. I'm going to click insert and I'm going to click link. And it's going to let me paste that link into the address bar like I'm going to Google or eBay. And text to display. I'm going to call it perfect, trend trade short, rules met, lost. Because I'm going to remind myself that sometimes I'm going to take a loser even if the rules are met. If I click the link, it takes me to where I went. And then if I want to, I like to color code. If it's a winner, I want it green. If it's a loser, I want it red. How did I feel taking that perfect trade? I felt confident. Any notes? Perfect. Cost of doing business. Guys, this is my first page. And what I'm going to do is I'm going to recognize patterns in the market that make me successful. And I'm also going to recognize patterns in myself. Term condition, term condition, term condition, term condition. I've created a pattern of trading into areas likely to stop the market, and it's removing money from my account. So every time I see this, I can focus on that. Every time you post one in the room, we can talk about it. We can recognize those patterns and get you on the path. Every time it's perfect, put it in your personal trade setups. It's empty now, but every time there's a high probability trend trade, put it in your personal trade setup. Every time Gary posts a high probability trend trade, Paul, Elvis posts a high probability trend trade, steal their picture. Put it in your personal trade setups because that's going to be your bread and butter in the beginning. As you focus on management, there's room there. Chart reading things, termination conditions. And then guys, I've given you nearly 70 pictures of high probability trend trade setups. Are you working on entries? The perfect entry is right here. Are you trying to identify momentum? The perfect momentum is right here. Are you trying to recognize clear paths? They're all right here for you, guys. I'm giving you every tool that you need. How many of you have gone through and looked at every one of these trades? How many of you have sat down for the 30 minutes that it takes and looked at 70 perfect trend trades while you were trying to learn the perfect trend trade? Kind of crazy, isn't it? It's right there at your fingertips. I just need you to go in and look at it. And then finally, you guys, take in those pictures, post them in class, post them in your spreadsheet. get to where you need to be, and that's going to help you focus on understanding the absolute best of the best. And then when you've got your entries, guys, I don't care if you win or lose as you recognize entries. I want to see perfect entries. I want to see rules-based entries. And then we're going to learn to manage them. This example plan has a very easy approach. Trade 2 contracts. Initial stop is 12 ticks in your ATM strategy on NinjaTrader. And it'll be moved above or below the window of opportunity. Meaning that as that trade is entered, right? Let's go back to the instructions. Entry rules means that when I enter the market, I'm below the window of opportunity. I'll move it 2 ticks above or below and it moves in the direction of the trade. When this reversal bar prints, I'll move it in the direction of the trade. Profit targets are 100 and 200. Guys, there's no room for emotion, anxiety, opinion. This is the most simple approach that you could ever take to learning this software. 30 days. Can we commit to 30 days? Is everybody comfortable with that? It takes 14 years to be a doctor. You will outproduce every doctor you know if you're a successful day trader. 30 days, the best of the best. 30 days focusing on what's important, focusing on nothing more than momentum, no termination conditions, and identifying that one area, that key spot. Laser focused on nothing but an entry, guys. This is it. This is your path. What's that market do it while I'm flapping my gums? Let's find out. And let me close this out real quick. Do you guys want a copy of that example plan? Do you want to make it your own? I hope so. The Sunday school answer is yes, Mark. Absolutely. I'm going to write a plan so I can hold myself accountable, so that you can hold me accountable, so that I can become that day trader that I told you that I wanted to become. That's what we're going to do. Smalls have broken above, right? Odds favorable momentum, guys, 50-50. Potential to break, but not broken. Did it make it back to an area of support inside of favorable large triggers? Sure didn't. No trade yet, if there's going to be. Termination condition creates a full reversal. Mid-band, large triggers are a full bar away. Holding on just a second, guys. You guys remember the gap theory? We talked about it once or twice. Let's talk about it one more time. There we go. Right there. Price accelerates all the way into an area. Large triggers don't follow if they remain below that reversal bar marker. Price is more than likely going to snap back and close that gap. May not get you into a short trade, but it keeps you out of a losing long. When price accelerates all the way to the mid-band, large triggers remain a full bar away. It's going to keep you from trying that long trade as price sucks back and closes the gap. This is a pattern. This is a pattern that happens every day. It happens so much that if you look at my spreadsheet, I've got pictures of the gap theory from other days so that I can keep being aware, so that I can create confidence through repetition. And after it closes, then you're going to read your indicators to see what direction you're going. Gary, termination creates a full reversal. Triggers are a full bar away. We just talked about this one. It closes the gap. You get in the middle of the gap, and you get stopped out. Do you see it, Gary? Gap theory. When price reaches an area and the large triggers don't follow, let it close the gap. Once again, those triggers are split. Larger up, synthetic or down. There's a huge window there. Sam, I will never tell you to not trade. No, Gary, it's in the moment. It's very much in the moment. And you just have to train your body to see it in the moment. And that's what takes the time, right? Because you're processing all these different things. This gap, Sam, you're going to write a plan, right? You're going to write a plan that says, this is what I'm going to do to get into a trade. And it's very simple at first, right? All you're doing is looking for termination conditions, odds favorable, and an entry. If your rules are met, Sam, take a trade. If the mid band is hit and the large triggers are a full bar away, this is the termination condition. Your rules aren't met. Do you see how that works? If the rules aren't met, take a trade. And Sam, it's going to take you a while to be able to process all this in the moment. Watch this. Live chart. Mid-band hit, large triggers were a full bar away, no trades in here. It closes the gap to the large triggers. Larger up, smaller down, not odds favorable momentum, right? Larger up, synthetics are all the way down here. I've got split triggers. I don't have any areas in between. I can begin to assess, the more repetitions I have, what's happening. Price reaches the mid-band once again. Large triggers remained a full bar away. No reason to look for a long trade here. See how it pulls all the way back? Smalls get below the large. The large begin to turn. They begin to widen. I'm into a divergence low. I need my small triggers to get to the other side of this. If I am going to go short, smalls are through. I'm now 50-50. I've identified a window of opportunity inside of favorable large triggers. Guys, this is where you're going to get. I've got 5,000 pictures in 2 years experience. That's how long it takes me to find this window of opportunity. If divergence prints, my rules say no trade. So I'm going to keep my finger right over that X. And if divergence prints, I'm going to get rid of it because my only options are whether or not my rules are met. So let's do this. If the market continues down, can we identify where it's likely to go with this much momentum? How do we feel about 76.26? It may get there. It may not. But that's where it's likely to go. This is where it's likely to continue. See how this pivot doesn't come from an area right back to a mid-band, just a trend trade on a higher time frame. So what did your 21-3 chart look like? Everything below the areas. Pull back to the mid-band. Strong triggers. This is an area with the potential to break but has not broken. Divergence printed. Because divergence printed, my rules technically aren't met on a medium probability trade. I forgot stops and targets. My initial stop, if I went short, I can put a buy stop where the market shouldn't go. I can put a buy limit at my profit target. And if that profit target is $100 on the first one, all I have to do is make it to 62. Because of the reversal bar, I'm risking 3 ticks to make that first $100. Does this make sense, guys? This is live right in the moment. Area with the potential to break but has not broken. Odds favorable momentum. Because of the divergence, brand new users probably aren't taking this trade. Because if I go back to that example plan, it says divergence reduces the likelihood that this is a trade that will win. First target at 100. Guys, it just hit it, right? Where would the second target be? You just got 100 on that one. If you were in at 72, I have to make it to 52 for a $100 trade, for $200. But look at that entry. Pretty cool, right? 13.2 leading the way. Odds favorable momentum. Termination creates a full reversal, creates odds favorable momentum, creates a pullback to an area of resistance inside of favorable large triggers. $100 made at this point. I'm break even at 72. Nothing bad can happen to me. I've got $100 in the bank and not a penny's worth of risk on this trade. Are we going to make 52, guys? Hell, I don't know. We may. We may not. How about the fib on the large chart? Which fib are you talking about, 10KM? This one all the way down here? Divergence? We identified it as 50-50, right? Divergence is likely to break based on momentum. It has the potential, but it hasn't broken. 50-50 trade. And I said that if you're 100% conservative, this may not be your trade. But if you take a trade with divergence, you've identified your first trouble spot, you manage assertively. 10KM, everybody's plan is different, right? Some people will take a trade with divergence. Some people won't take a trade. That's up to you. What's your comfort level? Some people will manage assertively and say that if a second divergence prints and the small triggers are inside, I'll exit the trade. There it is. And a lot of people will ditch this trade at 64. $100 in the bank, divergence prints again with the triggers inside, exit at 64, 65. That's 7 plus 10. That's $170 on a medium probability trade. But if you don't have the ability to read your indicators in the moment at the time and make decisions, not decisions based on emotion, but decisions based on a very clear plan, you're going to falter a little bit. And you know what? 10KM, that's not a bad thing. If you're a brand new user, no divergence is wonderful. If you're a brand new user, small triggers outside of the 5-1 are wonderful. But 10KM, you've got to develop your own plan and your own comfort levels. All I care about in the beginning is that you guys can find this entry, because that entry makes it manageable. Does everyone see? The area had the potential to break. Slowdowns on my small chart and anything can happen triggers have just pushed it right beyond my entry. It's not a high probability trade, but it's a medium probability trade that's very manageable based on the momentum. It's very manageable based on the tiny little window of opportunity. 10KM, you'll get to the point to where it becomes very much second nature. And remember, the patterns that we teach, so there's a similar market on ES. Below is a red fib and blue, 50-50. I don't know, Sophia, what do my rules say? Let's go through the rules. Are you ready? Sophia, what is this on the bottom? I like it. What do we see here? Remember, we're just chart reading. It's a fib or a rib. I was with you. How many triggers went through? How many trigger lines are below that Fibonacci area of resistance? One? Do you see something I don't? Let me blow it up. How many trigger lines? None, right? So what does that mean? No shorts. All right, you ready, Safia? Price reached this area of support or of resistance, right? Safia, how many trigger lines are above that area of support? I'm getting there, I promise. How many trigger lines are above? Safia, I'm gonna ask again. Here's my area, right? Here's a trigger. Large triggers are down, small triggers are up. How many trigger lines have made it through this key area at 4140? On my 13.2? None. That's how simple it can be. Safia, you started looking over here, didn't you? You started looking at your 5-1, trying to figure out what you were going to do when the rules weren't met on the 13.2. You weren't? Okay. Where did you see the one trigger above? But do you see how it's got to be that order of operations? Go up a little bit. And Safia, this is where you taking a picture helps me a lot rather than me guessing. Are you talking about the short here? I need help. I'm not sure where I'm looking. Are you talking about right here? Oh, thank you for that. But you have to put arrows on it, otherwise we're looking at the same thing. All right, so let's do that picture again. No, don't be sorry. This is fun. This is what the classroom is for, right? Take your time. You've got me. You have my undivided attention. Don't ever feel rushed. So how about if we do this? This will be fun. And I'm only going to do a 13.2 while you type up that picture. This bar reached support. Okay, so I'm right where you are. Cool. This bar reached support right here. Do you see it? And I had 0 trigger lines through in the moment. So what does that tell me? No trade. Here my small trigger lines are through, but my large trigger lines are not. So I have a 50-50, right? And on a 50-50, this becomes a potential trade, right? Because I haven't reached the next area. My small are through with odds favorable momentum. My large triggers are still above. This is my 50-50. And then when my small and my large get through, Safia, do you see that? The smaller through, the larger through. But it's right into a termination condition. So even though this area finally broke, we went into an area that hasn't. Does that make sense? I think I'm with you on what you're talking about. No trade, 50-50 trade, no trade. Because even though this is clear, that is not. So how did that 50-50 look? Well, it had divergence. Not everybody will take it. It had strong triggers, pulls right back to the mid band. And this is where initially you may not take that trade. But that much momentum pushes it right down to that termination condition. And then you've identified where the market. Did that answer your question? Elvis, nice job. Guys, I'm going to be so honest with you. I'm going to say the same thing as many different ways as I know how, and every one of you is going to hear it differently. Every one of you is going to grasp one thing and it's going to click, and another thing is going to sound like I'm talking a different language. And this is why I repeat, but your questions let me know what you see. And then when you ask these great questions, I can tailor my response to the way it's going to help you learn, I hope. That's my goal anyway. Jose, the other day I mentioned that I only use NT8 for placing the order, but I use the other charts. I do. Jose, when I set up my NinjaTrader 7, or when I set up my my NinjaTrader 8 to trade Apex, because guys, I'm trading Apex. I'm trading one of those prop firms that talk, you know, that you pass their combine. I think this is a picture. So I've got NinjaTrader 7 on my 13. I've got my 5-1 Jose with all my synthetics. And then I'm running NinjaTrader 8. I'm running one chart, entry chart, no tick replay. And I'm only using this for execution. And I'll run them because Apex gives me an account. It gives me an ID. Whatchamacallit. It gives me a user license that I can use on NinjaTrader 8. So I can run both 7 and 8 at the same time. And that helps. Absolutely, Sam. If you're using one of those prop firms, I have a license for 8 provided by, absolutely, Jose, I've had not one crash since I've done it. Guys, you recognize this one? 50-50. It had divergence, but I have a different set of rules. Rockstar entry. Guys, that was a nice $500 trade. I'm not sure, Sam. I've got my data providers, so I'm not sure. You've been building your charts and workspaces. It's been a nightmare. I'm sorry, Jose. John's got every template you could possibly need. The way I have mine set up, I'll show you, is when you look at my workspaces, I've got the ones for class. I've got my Nexgen charts, but then I've got an Apex ES and I've got an Apex CL. And what it does is I have it set up on my computer so that when they show up, when they load, the way I have my workspace set up is it literally leaves a spot right here. And when I open up my NinjaTrader 8 and I open up that one chart for execution, it goes right in there. These are great questions, guys, because we're going to teach you how to read the indicators. We're going to teach you the basic rules, what you're looking for, and then you're going to be held accountable for practicing, for getting yourself to the position to where you're ready to trade live. And if you think you're ready to trade live, oh, thank you for that, Chris. Claire, we're not matching. We're close, right? Claire, one of the things I do when we don't match, absolutely, is every morning I delete my cash and tick. Do you do that, Claire? Okay, so you're doing that. You're running. Sometimes data corrupts. Every weekend, one thing I'll do, and this is what I always do, if we're not lining up, the first thing that you can try is just repair and reset your data. It takes just a second to do, not a big deal, pretty easy. And then if that doesn't put us on the same plane, just start fresh, build some new ones, get everything 100% brand new. I rebuild every weekend. But it's still, there's possible. Sometimes John and I wake up in the morning and we don't line up. And I'm like, hey, John, what does yours look like? What does mine look like? One of us is wrong. So what we'll do is we'll get to the point to where we'll try to figure out, and we'll just both rebuild. So I don't know if that helps you, but going through and doing that helps. And then and then Jose, this is obviously crude coming into ES, but I'll literally run my charts like this. I'll build a workspace on 7 that leaves the gap, and then I'll pop my my 8 right in the middle, just like that. And that's where I'll do my execution. So for those of you that are doing Apex, that's a pretty cool way to be able to do it. I stole it from John Novak, so I say copy away. It's worked great for me. I have not had one crash since I've done it. And it's really, and the cool thing is it reminds you that your 5-1's just an entry chart, right? It's just an entry chart. And then Sam, if you want more information on those prop firms, start doing a little research. Right off the education page, there's Apex, Elite, Top Step. There's a lot of them out there. And Claire, you can always jump with Jason too if you're concerned that there's something going on. If there is, he'll be able to see it. But guys, right off the education page, there's links to each and every one of those accounts. And then when you follow the link, frequently asked questions. And yeah, Apex is having an 80% off sale right now. And that 80% off goes for the life of you doing it. When I started with Apex, I got their like $200 program or whatever for 40 bucks. It was pretty cool. And there's all the different stuff. It's SAVE80 is the coupon code. That's what the email said. So I love it, guys. Trade other people's money. If you're really good at this, if you're going to be consistent, if it's time to go live, why go live with your $5,000? Go live with their $5,000. Spend the $150. So what happened? Nope. If you reset the account, it stays on there. That's for your monthly charge, Sam. The 80% is off of it monthly. It carries through for as long as you want. And I think resets on Apex are $75 or $80 if I'm not mistaken. I haven't had to reset, so I'm pretty good. And it's lifetime even if you add accounts. Perfect. Wow, that was a lot of information. So guys, can we take a quick second? I'm not, but I do like what I do. I sure do like helping you guys. Can we recap real quick on the day? As we go into the last 30 minutes, I want to really open the floor for you guys if you have questions, if you have concerns. But I want to do this. Give me a why in the room as we talk about this. Odds favorable momentum, guys. What's it mean for you? Strong trigger lines. Rule number 1. It means you're in a market where the odds are favorable to continue down or continue up. So give me a why in the room if you're with me. This is your best of the best look. This is the one that's going to get you on the right side of momentum. Once you have it, you need to identify whether or not you've reached an area where the market is likely to stop. In the beginning, guys, keep it clear, right? What if for 30 days you had 2 choices? You're either into a termination condition or that termination condition has cleared and it's good to go. I don't know. Sam, it depends on the day, to be honest with you. It also depends on when you trade. But if you're talking about from the open, let's do it right now. This is the S&P. It opened at 8:30. Odds favorable, kind of wonky. Odds favorable, odds favorable. The beginning of odds favorable, but into a termination. Odds favorable to get you down to the termination. And now we're in a holding pattern. So that's 5 or 6, right? And Sam, which trade is an odds favorable 100% have to have it trade? Because I think that people lose sight of this. I think people forget that odds favorable momentum is a requirement for a high probability trend trade. If you have anything can happen triggers and everything else is picture perfect, everything else is ideal, everything else is the absolute best of the best, doesn't that fit into a medium probability trade where one small issue exists, and then can't you manage it assertively with your ability? So guys, in the beginning, it's a little bit of a waiting game. The more you commit to understanding these looks and giving yourself the ability to read indicators in the moment, the more trades you're going to find. Paul, first trade today, odds favorable, no terminations, pull back to the area, didn't work. And then odds favorable, 50-50, no divergence, perfect entry. And you got a little bit angsty there, didn't you, Paul? Both are rules met. Why did you manage so tight? If you went behind the reversal bar, that's cool, right? But this goes back to the lesson that we had yesterday. And I don't know if you were here for it, but we had a great conversation about this same look. Yours didn't even have divergence coming back. What changed on that second tap of the area inside of favorable large triggers? Sometimes you have to ask yourself that question. What changed? This one didn't even make it to the window, Paul. There's your window. You got in below the window and then allowed yourself to get stopped out inside of the window. Do you see it? I probably wouldn't have seen that in the moment if I was a brand new user. That's okay. It's a perfect read. So here's the second half of it. What are the chances that's going to happen again repeatedly? Sometimes you got to take that lesson, don't you? Sometimes you got to go, oh, crap. I got in below the window and then I got stopped out inside of the window. Ugh. That's okay, Paul. You know what the great thing is you posted the one that didn't work. Totally cool. Didn't work. Rules met. And then you posted the one that did work, but you deviated from the plan just a little bit. And don't do that. Don't know. The key is not to make sure mistakes don't cost you a lot. What's the key? Rules met. Why? Because rules met mean that you have a statistical advantage. You have to be okay taking losers. If you're going to be a day trader, you have to be okay taking a loser. If you want to be a day trader, you have to understand that you're not going to win every trade. And when you stop expecting to, you start winning more and more. Normal losses are a part of an equity curve. So window of entry, stop, imply around 2 large triggers on the 5-1, not the mid-band. Nope, so it's 2 parts. And let's find the picture that we did earlier. Sam, and I think this will clear it up for you on that. Let me find that trade where we did the bar by bar and took the picture. Are you ready? So what we're doing, Sam, is we can identify first from the top of the large triggers to the bottom of the large triggers. Are you with me? I can see the top of them. I can see the bottom of them. Cool. So when we talk about a window of opportunity, let me change the color. My window of opportunity is from the lowest point of resistance to the highest point of resistance. So you can see that it's not necessarily the top of the triggers to the bottom of the triggers. It's going to be those areas that fall within. And that's where the advantage happens. Because, Sam, do you remember that gap theory that we talked about? When price accelerates away from the large triggers, it tends to snap back. It's that snapback that gets us to that area inside. And that area inside is where we have our highest advantage. And Paul, I'm sorry to do this to you, but I'm going to pull Paul's picture back up. And guys, what you're going to find is the more you post in this room, I'm going to know what's going on in your head. And I'm going to feel very comfortable identifying what's going on. I'm going to recognize patterns in you. We're going to talk about these patterns. And then once we start recognizing these patterns, we're going to grow from it. So I'm going to pull this up real quick. I'm going to blow it up, and then we're going to do just a little review here. Sophie, I could never hate you. All right, so Sam, in this trade, for example, as it's pulling back from the top of the triggers to the bottom of the triggers, that's kind of our trigger look, isn't it? They're one on top of the other. This works pretty good, doesn't it? So where's my window of opportunity? From the lowest point of resistance to the highest point of resistance. Do you see how small the window is inside of those triggers that are one on top of the other? And Paul, I'm sorry. Do you see where Paul's entry is below it? And do you see how it pulled right back to that area of resistance inside of favorable large triggers? Guys, this is the greatest picture you could ever post in this room. Because if you take a second and dissect it, look at where the stop is, Paul, everybody. And I'm going to type it out. The stop is at resistance inside of favorable large triggers. So guys, this is how you begin to work on a management plan. You start saying to yourself, well, I need to put my stop where the market shouldn't go, not at the perfect entry. Paul, man, this is a great picture, and I love that you posted it, and I appreciate that you posted it. And Sam, does that give you a little bit of clarity? Cool. The whole idea is that you just practice over and over. Practice over and over. Put yourself in a position where it becomes easy. Guys, price reaches an area of support. How many trigger lines have made it through support? Give me a number, guys. How many trigger lines made it through that area of support? I'll start. I see 12. Does anyone up 2? Does anyone else see something other than what I see? I'm totally willing to sit here quietly. How many trigger lines broke through the area of support? How many? My smalls aren't through. My large aren't through. So what does that mean, new users? Can I go short if I'm a rules-based high probability trend trader? Nope. All right. Well, price pulled all the way up to this area here. I'm going to ask you the same question. How many trigger lines are above that area? Zero. So can I go long if I'm a high probability trend trade? So if I can't go short and I can't go long, Guys, what's my best option if I'm looking to be successful? Just wait. It's hard to do, isn't it? It's so hard to do. But when you begin to believe in the advantages that the software provides, when you begin to believe in the rules and their ability to give you a statistical advantage, waiting becomes easier. All right, Safia, let's see what we have. Is this box considered an area of a trade? Safia, are the rules met in that box? Let's ask. Support, no triggers through, no shorts, no triggers through. Here's the first spot where the trigger line started coming through, right? So Safia, we could say that right here, there was a 50-50. Can I redirect you a little bit? Awesome. Let me take a picture of your picture. Guys, I'm going to share a phenomenon with you that happens as you begin to read your indicators. Is you begin to see everything, not just what's in the moment. You start looking at every indicator on every chart and you start trying to create this significance for each indicator. So Safia, if we're just going through rules 1 and 2, let's say that we're studying. You and I are sitting down at Starbucks, the laptop is open and we're scrolling backwards on the 13.2 and we're looking to see if there was an opportunity. Is everybody with me on that? We're going to go through the study. So Safia, when I have odds favorable momentum, right? When I haven't reached that next area, just from a study standpoint, I'm going to circle a tail. This tail is the pullback on the 5-1. So tail is pullback on 5-1. This is the only spot where there was potentially a short trade. Does that make sense, Safia? So if we scroll back, I love these questions. You guys are absolutely making my life amazing today. So if I scroll back and I'm doing historical study and all I'm looking at is a 13.2, Safia, if you want to know if there were opportunities, get your circle, right? Get your ellipse and go back. We didn't reach support. We had odds favorable. And there's a circle. And if I scroll back, I can do the same thing right here. So what are we doing right now? Yeah, I know. And Safia, I want you to be okay with where you're at. Because you're right on the path. You go from not seeing anything. And then you see everything. And can we get a show of hands in the room? Who's done this? There's mine. I'll put mine first. I went from not knowing a darn thing to seeing everything and trying to figure out what the hell everything meant. Everything. Safia, you see you're not alone here? And then you see too much. So what reels you back in? Guys, when you see too much, Mark does. This is what reels you back in. When you start trying to make sense out of everything, you remind yourself what's important to be successful. Guys, this is the normal path. So go back and circle, and then watch this. Let me go to that circle. Safia, was there a potential trade? Or anybody, was there a potential trade? Yes. All right. How about in this area on the 13.2, guys? Was there a potential trade? No. Right? I don't have odds favorable in a tail, so I'll scroll back a little bit. In this area, was there a potential trade? Do you see how this works, guys? Your job is to do this every day until you recognize this in the moment. Guys, this one didn't make it back to the area of resistance inside of favorable large triggers. This trade wouldn't have gotten me. This trade would have gone without me. So the 13.2 shows me that there was a potential opportunity. When I look at the circle on the 5.1, it lets me know that I probably didn't get it. Does that make sense? What does that mean? That means that all of the people pushing this market down, pardon my French, they don't give a shit whether or not I got an entry. They're doing what they're doing. I know where my best chance was, and when it didn't come to be, I just didn't get the trade. They don't care that I'm not a part of it. Does that make sense, Safia? So just scroll back. Every time you have odds favorable, you have potential, right? I don't chase, Sam. I'm 50 years old and I've had 2 back surgeries. I'm in no position to chase. I don't chase. I wait for the best of the best. I have a very clear set of rules and I trade it. And Safia, you're reading too much because you're such an amazing student. You're reading too much because you're starting to understand the impact that the indicators have, and you're starting to read your indicators. And now we just reel you back in, and this is normal. I've done it with everybody in this room. All right, guys, so from 9:50 a.m. until 10:25, how many opportunities were there to trade? How many rules-based potential opportunities were there for the trend trade? Because I went back and circled. From a study standpoint, Safia, one tail with odds favorable momentum, right? That's it. Safia, some people took that one. So let's talk about how, after you do the easy ones first, right? So Sam, absolutely, let's revisit. And let's use this picture from entries to help out with that a little bit. Initial stop, below window, where the market shouldn't go. Are you with me on that one? And Sam, typically that window or that stop is 12 to 14 ticks. Typically, it's 12 to 14 ticks. What if, hypothetically, the window is 13 ticks big and my stop has to be 17 ticks? It's typically 12 to 14. Sometimes it may be more. Sometimes it may be less. But Sam, I always start, and I'm going to show you, I always start with an ATM strategy that just has my initial stop at 12 ticks, because what happens is that initial stop of 12 ticks gives me room and gives me time to move it manually where the market shouldn't go. Does that make sense? And then for me, I want to be able to make at least $200 on any trade that I get into, which means that my profit target needs to be at least on crude oil 20 ticks from my entry point. On the S&P, it needs to be at least 16. This for me is acceptable because I look for profits at 100 and 200. Does that make sense? If you are a trader that says, I want my second profit target to be $300, not $200, well, then that first trouble spot has to be at least $300 worth of distance away. And then, Sam, we're going to run through. Cool. I'm going to give you guys some stuff after this. Let me look at Paul's picture. Let me look and see what these guys are doing. Everything is through. The smalls are outside. The area is below. Paul gets in at the mid band. In at the mid band. No termination conditions. Guys, medium probability trade. Right? Not the best look. Not the odds favorable. Thanks, Paul. What's the one small issue that exists? The smalls aren't outside of the large. But he's got strong triggers, no divergence, a tiny window of opportunity. Paul's saying, I'm willing to take this trade with one issue and I'll manage it assertively. Nice job, Paul. Let me see what I missed. Elvis, last trade of the day, you met your goal for top step. Nice job. Everything says up. Elvis goes up, gets to the target. Embracing those pullbacks, Elvis. Nice job. Support likely to hold. Beautiful job, Elvis. Great job trading with direction and momentum. Jose, you're asking, is something wrong with your chart? In what regards, Jose? So here's your 8, right? Okay, I got you. I know what you're talking about. Jose, I want you to do this. I want you to right-click on your 5-1 chart, okay? They should be. You have a 5-1 on 7 so that you can see all of your synthetics. And then you have a 5-1 on 8. And I want you to right-click on that chart and go to Data Series and uncheck Tick Replay. See how Paul's chart, let me see if I can find it. Well, Paul, you've got Tick Replay put in as well because you've got both on there. If you untick Tick Replay, what it does, Jose, is see how on my 5-1, I've got all my synthetics and everything cranking through there? I don't have it on my 8, on my NinjaTrader 8. And by not having that tick replay, without those synthetics and everything, I'm only using it for the entry. And this is what's going to keep that thing from going down on you in the middle of a trade. So right-click Data Series, towards the top. Make sure that Tick Replay isn't loaded in. Then right-click, Jose, and make sure that your template is the 5/1/2023. But it looks like you're showing synthetics. You've got both large and synthetic on there. And you're clicking on Data Series, yes? And then if you need to, Jose, get with Jason real quick. I'll pull up my 8 real quick while I look at the next picture, and we'll see if we can help you out. Let me see where I'm at. And Sam, we got you on your question. Paul, you just took that one. Nice job. And bingo, target hit. Had the original target there. Left some on the table. Trust your indicators, right? Paul, tell me, I want you to look at your charts, Paul. I want you to look at all your trigger lines, the direction, the strength, and everything, and tell me what told you to exit that trade there, unless it was predetermined. And then, Gary, that's that same entry. That's all right. We miss them sometime. And then Paul putting the picture in there. Little red bar got you scared. Show tick replay. Unclick. Is that data series? Saw it and overanalyzed it. Guys, you're going to do that. You're going to see and overanalyze. Why are you doing that? Because you don't trust 100% just yet. Guys, I just pulled up my NinjaTrader 8 for you guys. If I right click on the chart and go to data series, tick replay. Make sure that it's unchecked. Jose, Paul, tick replay on data series. Make sure that it's unchecked. Straight from the chart. Access them how, Gary? Like, how do you open it? Elvis, same way that you would on 7. New. Is there a workspace option? Nope. So do this. Go to one of your untitled workspaces, open it up, add the charts. Add the charts that you want to add. And guys, I know that this is crazy. All of you guys that have grills semi put together in the backyard with spare parts, just like me. You know that we have a software user guide, right? That we have a set of instructions for NinjaTrader to help you build workspaces, chart templates, right? Coming through, downloading tick data. And then the cool thing is there's a help function from NinjaTrader. We'll get you where you want to be with it. Play with it a little bit. So when you're creating new workspaces, Elvis, just build them. I build them off of the untitled. Or, Elvis, let's say that you want to take your ES and turn it into a CL. Go ahead and change everything and then save as CL, and that'll help you out a little bit with that too. So Jose and Paul, that should fix you. Gary, trust. If you're overanalyzing, you're overthinking, keep it simple, right? Every time, guys, keep it simple. Simple is good. And remember that you don't have to predict what's going to happen. You have to gauge what is happening. What is happening right now in the moment on the 13.2? Small's below the large are starting to angle down. Yes or no, guys? Is 4132 broken? Is 4132 a termination condition? Is it broken? Or does it have the potential to break? Which is it? 50-50? I don't know, Elvis. It's got the potential. So if it's a 50-50 trade, and I've already got a slowdown at that area that hasn't broken, I've got flat triggers at an area that hasn't broken, I have a pivot stop out at an area that hasn't broken, is this your best chance of success? Ron says it's not for him. It's not for me. It might be for you. I don't know. That's only a decision that you can make. If this isn't your best look, is it worth trading? Some users will say, well, what does my highest time frame say? John Novak would say, hey, look, I've got odds favorable momentum here. Maybe I'll take a shot. Some people will go to an 8 range chart and say, well, let me gauge the momentum on the 8 range chart. What does it say? Oh my gosh, my 8 range charts give me signals up. None of my triggers are through support. None of my triggers are through support. Potential to break. You start gauging, right? I hope, I wish, I think, I wanna versus everything is perfect. John Novak and I spent over an hour just BSing via Skype waiting for a trade to set up yesterday. And there was a lot of, this is what I see, this is my chart reading, this is my chart reading, this is what I see, but my rules aren't met yet. Guys, when the rules were finally met, after an hour of waiting, that was the result. That was my first trade of the day. The advantage of momentum, being able to identify where the market's likely to continue, and then taking profits where the market was likely to stop. That's what we teach every day in this classroom. Just takes a little bit of practice to read those charts, guys. Did I get everybody's pictures? Did I answer your questions? Are you excited about growing with the software? Are you excited about moving forward? Is anyone else absolutely floored every time they see how accurate Fibonacci can be? How momentum tends to carry things in the direction it's traveling? How you've got the ability to pinpoint where the market's likely to continue, and then guys, you have such a clear set of rules to keep you focused on what's important, right? It's like noise canceling headphones. All right, one last thought on the way out. You're new. All of you are new. I'm new. We're gonna learn. Oh, me too. I wasn't ready for it earlier, Sophia. True story. I tried it after my first spine fusion. I didn't have the discipline or the focus. I wasn't willing to work, and it didn't do any good for me. But now at 50, I'm a little more disciplined. I'm a little more focused, and I spent a decade training managers how to be efficient through systems and routines. So this kind of appeals to where I'm at right now. Look at that, 50-50, couple divergences, and it pushes up beyond the best of the best. Guys, it's limitless. Oh, wow, Ron. Just jump in, go say hi. Just kidding, don't. Take a picture though, I want to see it. I love sharks, but I have a very irrational fear that one will eat me one day. I don't know why, it's irrational. Oh, I saw the shark pic earlier. That's not the one. You weren't peeking over the pier. Oh, that is it. That's scary. You ain't got sharks. We got sharks. I love it. No, Gary, I'm more likely to be bit by a New Yorker than a shark. My son told me that. I am more likely to walk through the streets of New York and be bit by somebody than to be eaten by one of these bad boys. Elvis, still need to hone that entry price? Yeah, just a little bit. Just a little bit. And Elvis, I think that on this one, that's a small picture. When you're taking a trade like this, Elvis, when you're looking for that trend trade, rule number 3, letting the pullback to the area inside of favorable, that's going to be the one that gives you the best results. See how this one's kind of in the middle? No, it's a little small, but you're kind of in the middle here. You're not letting one of these great Fibonacci areas you paid good money for help the trade at all. You tried to get in at the fib, and then what happened? You tripped? When you say you tried to get in at the fib, what does that mean? Does that mean that you had a limit order waiting here at Fibonacci, and then it jumped? Because price is going down when you got in. So how did it jump to the top of the bar if your order was down here? You guys forget that I look at charts every day and I've seen everything that can happen. Okay, so if you had a limit order at the fib here, you got filled, you got filled, you got filled. The only way for you to have a limit order waiting in an area and get filled right here is if you hit buy market. Is if you thought for just a second, oh no, it's not going to make it to the fib, and you entered the market with a buy market. If maybe you watched ticks go up a little bit and you thought, oh no, it's going without me, because Elvis, I've done that a million times myself, where I've said, crud, it's going to go without me. I better get into that trade. Here's an example of it, guys. And you're going to do this, everybody. You're going to be waiting for that perfect entry, that perfect area where everything says you have the highest chance of success. And you're going to get caught up on watching that bar tick. And when it starts to go against you, you're going to jump in. You're going to say, it's going without me. And then it's going to do exactly what it was supposed to do. Has anybody ever done that other than me? Am I the only person, human, in here? It's all part of the process, guys. Initially, you get in here and you get stopped out when you put your stop at 12 ticks where the market should go, right? And then as you're learning it, you don't get it at the same, and you get in here and your risk is increased and your profits are reduced. And then eventually, guys, you embrace the plan and you have the trust and you create very manageable entries based on high probabilities. Pretty cool, right? And that's what we do. Elvis, last picture. Elvis, your pictures are small. Odds favorable, pullback goes up. Odds favorable, pullback goes up. Odds favorable, pullback goes down. Guys, that's a 21-3 chart. It's a little small, but the patterns are the same. Odds favorable, pullback, it goes up. Beautiful work, everybody. Great trading today. Great questions. I appreciate the participation more than you guys will ever know. Let's do it again tomorrow. Let's get in tomorrow. And I want you guys posting pictures. I want you guys posting pictures, asking questions. If you haven't written a plan, I want you to take a stab at it. I want you to steal my plan. I want you to use this checklist. I want you to focus on the best of the best, because the reality is if you really keep it simple, keep those blinders on, you're going to get right to where you want to be, guys. Y'all enjoy your afternoon. I have a very rare sunny day here in Pacific Northwest. I'm going to go play 18 holes of golf in a little bit. Wish me luck. I'm going to focus on the process of a swing, the fundamentals of a swing, and I'm not going to worry about the score, and we're going to see how that works out for me. But I'm going to trade. I'm going to look for high probability trend trades first. You guys have a great afternoon. I'll see you in the morning. Take care, everybody.